The pound is breaking down, but here's the twist. It's not UK politics driving this move. It's a dollar that's absolutely steamrolling everything in its path. Right now, pound sterling to US dollar is sitting at 1.3168, down 0.2%, and I'm seeing a setup that could deliver a massive move in the next 48 hours. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade today, including a sniper entry that most retail traders will completely miss. Here's the verdict. Pound sterling to US dollar is in a strong sell on the daily, weekly, and monthly timeframes. I'm calling this a trending market with downside acceleration potential. The single invalidation level that flips this bias? That's 1.3249, a daily close above that level, and we need to reassess everything. Write this number down. If we break 1.3166 today, the entire structure resets and we're looking at 1.3083 within a week. The herd is getting slaughtered here. Retail positioning data shows long pound sterling to US dollar positions at elevated levels, which means the pain trade is still lower. When you've got the ADX reading at 34.54 confirming a strong trend, and the RSI at 33.05 still not oversold enough to trigger a meaningful bounce, you've got to respect the momentum. Let me walk you through this chart from the top down because the damage is structural. On the weekly time frame, we've got a strong sell with price trading well below the weekly MA20 at 1.3388 and the MA60 at 1.3405. These are now massive resistance levels. The weekly MACD is showing a bearish crossover that's gaining momentum, and there's no sign of slowing down. Drop down to the daily, and the picture gets even uglier. We've got a strong sell with price completely below the daily MA200 at 1.3374. The 200-week moving average is sitting right here, acting like a brick wall that's now become ceiling. The 50-day MA at 1.3388, the 100-day at 1.3405, every single moving average is now resistance. The MACD on the daily is showing a bearish histogram expansion, and the momentum is accelerating. Now let's look at the 4-hour time frame. We are seeing a strong sell with the MA20 at 1.3321, MA60 at 1.3388, and MA200 at 1.3374, all stacked in perfect bearish alignment. Look at this 4H negative momentum. Buyers are completely exhausted. Every bounce is getting sold, and we are making lower highs and lower lows in a textbook downtrend. The 1-hour time frame confirms the strong sell picture. The Williams %R at -91.64 is deeply oversold, but in strong trends, oversold can stay oversold for extended periods. What most traders miss is that the CCI reading at -126.05 is showing extreme momentum to the downside. This is not a market that's ready to reverse. This is a market that's in full distribution mode. Here's what most traders miss. The key support and resistance levels are telling the real story. The pivot at 1.3215 is now acting as overhead resistance. The first support at 1.3166 is the only thing standing between current price and a much deeper move. Below that, we've got S2 at 1.3132 and S3 at 1.3083. On the resistance side, R1 at 1.3249, R2 at 1.3298, and A3 at 1.3332 are all acting as barriers to any meaningful recovery. The cross-asset linkage here is critical. Gold is getting hit, the dollar index is ripping higher, and pound sterling to US dollar is moving tick for tick with the yield differentials. The US 10-year yield is backing up, and that's providing a fundamental tailwind for the dollar. Sterling has no domestic catalyst to fight this trend. Let's connect the dots on what's actually driving this move. The 24-hour news flow is clear. Sterling is pressured not by UK politics, but by a strong US dollar driven by tech jitters. The Nasdaq's weakness is sending flight to quality flows into the greenback, and pound sterling is collateral damage. Yesterday's risk-off sentiment changed everything because it confirmed that the dollar is the safe haven of choice when markets get nervous. The policy divergence narrative is widening. The Fed is signaling rates higher for longer while the Bank of England faces a much more complicated path forward. UK economic data continues to underwhelm, and there's no immediate catalyst to change that picture. The 1 to 2 week directional lean remains firmly bearish on pound sterling to US dollar unless we get a fundamental shock to the system. The invalidating event would be a hawkish surprise from the BOE or a massive risk-on rally that pushes the dollar lower. Until then, selling. Rallies remains the highest probability strategy. Do you think the pound finds support at 1.3166 this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. Strategy 1. The sniper. Conservative. The conservative play here is a bounce fade at resistance. I want to see price rally back toward the 1.3215 pivot level before establishing any short position. The trigger condition is a 1 hour close below 1.3180 with bearish momentum confirmation. I want to see the RSI curling down from overbought on the lower timeframe. Entry. Short at 1.3185 on a 1 hour close below that level with bearish momentum. Stop loss goes at 1.3225, just above the pivot level where we know there's order flow. The logic here is that if we reclaim the pivot, the bearish thesis is compromised. Target 1 is the S1 support at 1.3166. Target 2 is S2 at 1.3132. The risk-reward ratio on this trade is approximately 1 to 3.2. Which is exceptional for a conservative play. What voids the setup entirely? A daily close above 1.3249. That would indicate that the bearish momentum is fading and we need to stand aside. Strategy 1. The sniper. Conservative. Entry. 1.3185. 1H close below with bearish momentum. Stop loss. 1.3225. Take profit 1. 1.3166. Take profit 2. 1.3132 risk, reward. 1:3.2 invalidation. Void if daily close above 1.3249. Strategy 2, the active trader, standard. For the more active trader, I'm looking at a pullback entry with better positioning. The idea here is to wait for price to break below 1.3166 with momentum, then enter on a retest of that level as resistance. Entry condition. Short at 1.3160 on a 4 hour close below S1. This is a mean reversion fade. We want to see that support become resistance. Stop placement goes at 1.3200, above the daily pivot and above the broken support level. This gives us breathing room while maintaining a favorable risk profile. Target 1 is S2 at 1.3132. Target 2 is S3 at 1.3083. We are looking at a risk-reward ratio of about 1 to 3.4 on this trade at MY trailing stop rule. Once target 1 is hit, move the stop to break even and let the remaining position run. This protects profits while allowing for the potential extension toward 1.3083. To type your pound sterling to US dollar range for tomorrow in the comments now. Let's see who's aligned with the trend. Strategy 2. The active trader, standard, entry, 1.3160. For H close below S1 at 1.3166, stop loss. 1.3200. Take profit 1. 1.3132. Take profit 2. 1.3083 risk, reward. 1:3.4 invalidation. Void if 4H candle closes above 1.3166. Strategy 3. The aggressor. High risk. For the aggressive trader who wants to chase momentum, I'm looking at a breakout play below S1 on the 1 hour time frame. This is a counter-trend or momentum chase entry on smaller time frame extremes. Entry. Short at 1.3150 on a 1 hour close below the daily support zone. We are chasing the breakdown with the expectation of accelerating selling pressure. The tight stop goes at 1.3175, just above the S1 level. We want to keep this tight because we are playing for an immediate acceleration. Target 1 is 1.3120, just above S2. Target 2 is 1.3083 at the S3 level. Here's the risk reward on this play. We are risking 25 pips to potentially gain 67 pips, giving us about 1 to 2.7. This is only for those who can lose small and manage risk aggressively. Let me be clear, this is a high-risk play. If price doesn't accelerate immediately, we get out. The invalidation is any 1 hour candle closing above 1.3166 on screen overlay graphic. Strategy 3 entry. 1.3150, 1H close below S1, stop loss. 1.3175 take profit 1. 1.3120 take profit 2. 1.3083 risk, reward. 1:2.7 are invalidation. Void if 1H candle closes above 1.3166. Never risk more than 1 to 2% per trade. No positions through high-impact news. We've got a busy week ahead with US data releases. Stops are non-negotiable. This is how you survive to trade the next big move. Let's summarize what matters most for the next session. The single most critical level to watch is 1.3166. That's your line in the sand. Hold that level, and we might see a relief bounce toward the pivot at 1.3215. Break that level, and we are looking at 1.3132 and potentially 1.3083 with a vengeance. Tomorrow's focus is on US durable goods data and the dollar reaction. If we get a beat on the numbers, expect the greenback to strengthen further and pound sterling to US dollar to test those lower targets. If we miss, we might see a reprieve, but I'm not calling a reversal until I see a daily close above 1.3249. If you want the full breakdown on how the dollar index is shaping up and the correlation with gold, that video is live now. Tap the end screen, smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one. Keep your stops tight and your targets realistic. That's how we survive to trade another day.